Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Kajaria Ceramics, a very good company in the infrastructure ancillary domain, but the stock has not performed at all over the last 4 or 5 years. So let's understand what is ailing the company and let's understand whether you should invest in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Before I talk about Kajaria Ceramics, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. It goes up to $10 a month, and when you take that membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up there. Also, I'm going to bring in more features to the $10 membership, so you don't have to pay more and you'll get better, you can say, facilities from that. So kindly support me there on Patreon. Now about the company. Kajaria was established in 1988 and they are the largest tile manufacturer here in India. 68 million square meter capacity that they have, if we combine all across whatever plants that they are having, and the amount of production they are doing every year. There are about 8 plants across India and they have a nationwide presence where they sell their products. If you look at the financials of the company, this is Q1 21 versus, so this is the June numbers, and the sales dropped by around 65% during Q1, and you may understand that we have had a 45-day lockdown, complete lockdown in March and April, and that's why probably it was really hurting for such companies. And if you take that into consideration, that infrastructure did not do that well, so construction activity was completely stalled. So the sales figure of 2,277 crores is perfectly understandable. They had a loss of 32 crores versus a profit of 52 crores. There's a high combined promoter and institutional holding, so it is quite decent. Before this quarter, the return on equity was 15.5%, which is very good considering the industry that it is catering to, and with the kind of slump the industry has gone and the economy has gone through even before the pandemic hit. So 15.5% is a very good return on equity. Operational numbers have declined over the years and it is virtually, there is no debt, so it is a debt free company, and there is debt that is working capital debt, and when you consider the business that it is into, I won't say that the debt is a lot. So what is ailing the stock? I believe mediocre results, so continuous mediocre results from FY16 onwards. So from 2016 till FY21, now beginning of 21, it seems like the whole of FY21 will go unnoticed and in bad shape, and let's see how it goes in FY22, and that is why the stock has not performed at all. So if you look at the stock, over 5-6 years it has done virtually nothing, not gone down a lot, not went up a lot, and in fact when the stock was down in March, it was down something like 60% from what it was in 2015. So investors are losing a lot of money as well as time on this stock. Raw material costs surged. So in 2016 the oil prices were lower than what it is today. Even just a few months back the oil prices were lower than what it is today. Oil is one of their biggest raw material, and then there are other costs attached to it. Cost attached to you can say movement of goods, movement of their raw material products also, which has also surged during this period of pandemic. So everything has escalated for the time being, so it will take some time for this to settle down, and the investors understand this, and that's why the selling in the stock, and people are staying away from the company. You can understand that the current situation has worsened the position of infrastructure, real estate, and ancillary plays to that industry. And Kajaria is no different, and directly it serves the real estate industry. And if there are no large houses or homes built all across India, then there will be difficulty for them to sell their tiles and other, you can say, home improvement products. Yes, you can say that people will go ahead and get their house revamped, or you can say furnished, etc. But that would be also few and far between because of the kind of economic situation, people struggling for jobs. So unless again in this industry, or for the stock to really surge, unless the economy grows by around 6% or more, it would be very difficult for companies like Kajaria to perform. Construction activity declined not only during this last 6 months, but over the last 2 to 3 years. It has been in complete decimation from 2018 January. So 2.5 years, nearly 3 years now. Construction activities have really, you can say, nosedived. It had very lofty valuations in 2017, and that led to major selling later on. And now I could say that the valuations were very reasonable at 300, and that's why the buying came in. So the reason for buying from 300 till 500, 540, that the stock has surged, is because of very reasonable valuations at around 300, 350 rupees. But at this price, I still believe that with prospects looking bleak for the industry, it would be very difficult to buy the stocks at these valuation. And you need to understand that over the last 2.5 years, there has been mid cap sell off, and due to that, there have been issues of the stock being sold off to a greater extent in mid and small cap sector. So, as I explained, so lofty valuations earlier, about 2 3 years back, and at 300 rupees, the valuations were very attractive. Mid cap sell off also led to a major sell off for the stock, and the mid cap index has come back, but these stocks will only come back when economy really returns and people understand that we could see major uptick in these sectors. If you look at the technicals of the stock, then it may have seen or made a bottom at around 300 rupees. The short term support lies at around 490 or so. It seems like that 490, 480 support should hold for the moment. Even if it goes down, 400 seems a very strong long term support. So can't see the stock go below 400 or reach that lows that we have seen just recently. It looks much better on charts than it was looking, say, 2 3 months back. In fact, in the last month and a half, it has moved up sharply, and it looks like that people are believing that FY22 would be much better than 21. But I have my reservations on that. The stock is already now has gone up from 300 to 540, so you have to understand that the stock has surged around 80% from those lows of March. May see some correction, so I believe that it could stay in a range between 500 to 550. A big upsurge is expected above 600 levels. In my opinion, what is to be done is that buy only if you have a good 5 6 year time frame and you have some spare money that you can stay with in losses. May not see March lows again, so you have to understand that, but I think it could remain in a range, so you have to take that into consideration. Also, I am favoring more the FMCG and the consumption names which are direct plays, so white goods, etc., and something like that, rather than buying into infra ancillaries or real estate ancillary play. Yes, recession will fade away someday and these stocks will surge, but we don't know when that will happen, whether it's 1 year, 2 year, 5 years, 6 years, and that's why I have a very long term time frame if you're holding on to it. If you have it and you are in slight losses or something, then probably hold on to the stock. So this was my video on Kajaria Ceramics. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.